Welcome, everybody, to another edition of the Florida Funders Skin in the Game podcast. Really excited about today's guest, who we'll introduce here in a second. Sax, how's it going, man?
Going well, Tom. Going really well. We had a little hiatus the last month. Tom's enjoying himself in Utah, so had to take a month off, but we're back, and we're back in a big way because we have a very, very special guest today, as Tom said.
By the way, I didn't take a month off. I'm out here working my ass off.
a month off from our pod. That's what you did. That's what you did.
Oh, we have a great guest. So another local Tampa unicorn success story. We're really excited. Scott Price, is here from A-lign, and who just did a big deal that's been all over the media. So Scott, welcome. Thanks for joining us today.
Thank you, and Tom and Saxon, for having me. I'm excited to spend a few minutes with you guys and be able to talk about how Tom takes month-long vacations.
I was going to say, just like Tom, you've taken the last month off, right?
Yeah, right. Well, congratulations on your deal. How exciting. Another unicorn here in cybersecurity, which Tampa's kind of getting known for, huh?
I totally agree. I mean, I think it's obviously a great opportunity for Tampa. The success that you, Tom, and others have laid the foundation for continued. And years ago, I said no one really was coming out being a cybersecurity hub of the country. You may have healthcare in Nashville, financial services in other places. And why not Tampa Bay with ReliaQuest and KnowBe4 and ConnectWise and others that have come out from them? Why not we own cybersecurity in Tampa? And I'm glad the country is finally taking notice.
Yeah, that's awesome. So let's back up on your background and give our audience more of an introduction to Scott. You're part of two mafias. You're part of that FSU mafia that has done so well, including Tony DiBenedetto and Stuart Lasher and Brian Murphy, and you're also part of the Arthur Andersen mafia. So you got
the Arthur Andersen mafia is strong. Now that our friends' kids are getting jobs, I called Mike Glam over at Remax, looking for help, etc. So yeah, the mafia is strong at A. Andersen. That's obviously where I started my career. And when Enron happened, I did not go on the deal and said, I was 26 years old. I didn't know what I didn't know, and said, let's go start a company doing IT security auditing. And Arthur Andersen says, well, it's not really on our track. So I was let go on a Friday morning, May 2nd of 2002. And by that afternoon, I started a firm doing these SAS 70 audits with a wonderful name called SAS 70 Solutions, like Bob's tree cutting solution.
I'd come up with that.
Yeah, it's really just revolutionary.
Right. We hired that marketing and branding firm, to come up with it. And it was all when I called, people knew why I was calling about those audits. It wasn't Scott Price and Company, and spent all weekend getting a website up and signed our first client on that Monday afternoon. And then I remember that was in May. I got paid on June 28th, and I think June 30th we were moving into a new house. And I don't know if we hadn't gotten paid, I wouldn't have been able to have the down payment on the house. So it was a I think there's people that say, hey, I'm going to go be an entrepreneur. And there's people that's sort of like me that go, oh, let me go try something. And if it doesn't work out, I'll go get a job again. And it happened to work out.
26 years old, you said, Scott, right?
26, yeah.
Unbelievable. That's what it's all about.
It was a great journey. And then, in 2009, I split with the other gentleman who I started the firm with and focused on building the line to take more tech-enabled services into the realm of what we do and a little bit broader. And that was probably more humbling because it was different than the Andersen days when I had a book of business that didn't have an auditor anymore because Andersen had gone out of business. And I started again at 33. And it took me a solid 9 months to get my first customer. And that was a very different feel. You thought the second time around things would happen faster for me, but you realize sometimes you're not as good as you thought you were, and the market has a lot to do with it and the timing.
And that's interesting because we always look for second, third time entrepreneurs, but we've heard from several of those second and third time entrepreneurs, and now you included, it's not always easier the second time, even though you do know a little bit more.
you just make new mistakes. Maybe not the same ones, but you still make them. And that's what I found out that I did. And I think I bootstrapped the firm and wrote checks into it until 2014. So for 5 years till we became profitable. And that it's just humbling because you go from having a firm to starting over again, and you quickly forget how it was back when you started at 26, thinking it was easy. And it was a hard road. 0809 was when I started A-lign. You think about 09, the financial crisis. Yeah. Again, not understanding macroeconomic factors like you all do when you look at investment. Sort of.
I don't know about that, but
yeah.
Again, timing's everything, right? But hey, if you can survive, we've heard from quite a few founders who started in that 08, 09, and which not many people were starting companies at that time because, half of us thought the world was coming to an end. Yeah. And I give you a lot of credit. You had the guts to go out and do it. And again, we've heard from other founders who started at that time. And those first couple of years, they had to be rough because I remember, 08, 09, it was nobody was building. Unemployment was really high. I mean, you go down the street now and you see cranes and houses being built everywhere you go. None of that. I mean, nobody was working, and not nobody is an exaggeration, but I mean, a lot of people were out of work, and there were a lot of industries that were just. We were at the time. I was in online training with Vector Solutions, and we were selling. Our main market was contractors, architects, and engineers. I mean, those industries were just blighted. Luckily, we had moved into healthcare, and healthcare did fine. So give you credit for that. Now, I want to ask you about that. You said when you start A-lign, you started to be more on the IT side. Mm-hmm. So did A-lign start as a cybersecurity firm, or did you morph to that?
No, it started as that. I really understood the role of technology was going to play, though, in delivering our work. You figured out that the old let's gather documents and do emails and things like that wasn't the way to do work, that you actually had the ability to maybe ingest data, work remotely, work in a spread environment. And it really came out of 0809 where people had lost their jobs and sort of people didn't know, well, that person doesn't work here. And that got centralized to a certain location. And so it doesn't happen here in this office anymore. And I started thinking, how do you get work done in that situation where you got to create a central repository and ingesting data and making stuff very easy to do because you didn't have the same employment base that you had before. You had a lower employment base. I had to bring technology to bear to allow our clients to be able to gather documentation for the cybersecurity audits to make them more efficient.
Okay.
Yeah.
Now, when I think of A-lign, I think of SOC 2 compliance.
Yep.
And I know you're a lot more than that today. When did you get into SOC 2 compliance? And tell our listeners who aren't familiar with SOC 2 what it is, if you would, please.
Yeah, so the original SAS 70 audit was focused around IT controls at a payroll company that's affecting financial statements of their customers. So ADP, paychecks, whatever it may be. Then people started saying, I'm concerned about the security of that data. Who has access to it? It may affect the financial statements, but because of banking regulations such as Graham-Leach-Bliley or healthcare with HIPAA, a CPA has great integrity and objectivity, and there's an opinion there, which means there's liability. How do I make sure data is secure? And so SOC 2 came out in that 09 timeframe, and that really allowed the total addressable market of people subject to that type of audit to increase. And so really we had the ability to say, let us go out and audit cybersecurity controls around how a company secures data, accesses data, the resiliency of the data centers and physical security and things of that nature. And so the SOC 2 world really blew up. And for us, it amounted to most of our revenue early on. And now today it's a little over only half of our revenue as other regulations have come up globally.
SOC 2 is federal, right?
SOC 2 is focused on the commercial market. There is a federal.
No, it's a federal matter.
Yeah, it's a federal from the Mary Sue CPAs. Yep, it's a federal.
So how quickly after you started A-lign were you doing business outside of the Tampa Bay region and Florida?
My first customer was in New Jersey, and So I would love for it to be in the water in Florida, but it was in New Jersey. So it was quickly where we did things of not billing for travel, fixed fee all in, so we could compete with a local New Jersey resource. And as you know, in '09 down in Florida, we had great labor costs. The cost of us doing business was less expensive. So we were able to do work at a very attractive price point when compared to local resources. And specifically the Northeast in California, where at that time was the traditional tech hubs, you had these companies that we were able to attract at the price point from Florida.
Scott, I want to go back to something that you said. You bootstrapped, from '08 to 14?
'09 until 14, yeah.
'09 to 14. What was the catalyst that made you what was the catalyst that made you go out or why did you want to go out and get outside funding?
Yeah, again, going back to what you don't know, getting to more enterprise level customers. And I think very highly of the Tampa Bay area. And, people really didn't know it as much as of where companies are founded, successful companies are founded. And I made it to the final three on a large software company that we all would know. And they said, tell us about your company. You're down to the final three. It's you, a Big Four firm, and another Carlyle-backed company. And I said, well, you're so important to us. I brought the entire ownership group to meet with you. And you see them go, wait a minute, that means you're the ownership group. Yeah. And I think that he could have ranked us 11 out of the 11 people. They would have re-ranked us 11 because of that. And so for us, the capital was validation to the market about the company, about our thesis and what we were doing, and also validation to the employee base that this was a great company because obviously someone's going to invest in it. And then as you think about growing up as a company, there's, you're done with making the babies. It's time to raise the children to some degree of how you could go get a solid CFO, a CRO, people like that, because you have a backer that believes in you. And so that was really where it was not about profitability for the company or anything of that nature, but it was really about validation of what we were doing, that someone's going to invest in us.
Who was that first investor?
So it's, you think about the mafias, as you said, Tom, Andersen and FSU. It was FTV Capital, which has become sort of the Tampa mafia with ReliaQuest. They were the first investor in ReliaQuest, just like they were our first investor as well. And so FTV was the first in. You get several private equity firms calling you, and we actually, I talked to 5 private equity firms. I talked to 5 investment bankers, and I said, I want to get a deal done, but I'm going to represent myself, which is great for a fund to hear that they have the founder representing themselves as a deal, right? You froth at the mouth about it. And so I said, I'm not going to hire a banker. I want to get a deal done. I want to keep working on what our vision is for the company. But any of you guys get sideways with me, I got to hire one of these bankers. Everyone pays 20% more. That takes this much longer. And so FTV was a great partner for founders. I think as you all know, working with founders is challenging sometimes in an investor role. And we think we can conquer the world as well. So you need some reins. I'm sort of, my CFO calls me all gas, no brakes. And so FTV was a great partner from a founder perspective for me. Yeah.
And they're probably feeling pretty good about that initial check they wrote, right?
I did look back. We got 5 times on the first turn and 3.5 on the second turn. So they're very happy with.
They're feeling good about that.
Yeah.
Yeah. That's awesome.
Yeah. So all gas, no brake. So do you have somebody around you putting the brakes on? How's that work?
Yeah, I've got a great CFO who's been around the block a few times. He played baseball at Cornell. I joked he probably hit off Babe Ruth back in the day. But he's been great. This is our 6th private equity term too with me, and I think it's really important for a founder to have someone who maybe doesn't go think we can conquer the role, has been there and seen that before, able to apply the brakes when needed. And, also be a real trusted advisor, because I think the CFO and CFO as such, or the CEO and the CFO have such alignment. Whereas if it's your, head of of, it's your CTO or it's your COO or your CMO or your CRO, they maybe are not as enterprise focused. And so that relationship between the CEO and CFO is so critical. And I think we're sometimes maybe the only ones in management that are so enterprise focused in what we're thinking.
So did he come in that first round in 2014?
No. So I had a CFO. I went through in 2017. This is interesting story. Once the validation, I wanted to have the validation. We went through a process in 2017. I did not have a CFO. I didn't use GAAP because it was my income taxes. I didn't do anything right at all. And the quality of earnings came in. And of course, that was a mess. We got retraded 5 days before closing in 2017.
Wow.
Yeah. The flights were booked to go out to California, sign in person. And I said, if it's more than a penny, I don't think we're going to do the deal. And so needless to say, I had a trip to Napa that 5 days later instead of a trip to sign. And so I took the Q of E and I took the findings from the due diligence, et cetera, and said, these are the things we need to fix and grow up as a company. So we hired a CFO who came into that transaction, and he stayed with, and then we went out to FTV, and it was great having a CFO in place because, again, we were probably 20 million in revenue. And I was, I'm head of sales, I'm CFO, I'm CEO, and very involved in the business. And so that was a really, a grow up moment to go through a quality of earnings, to go through a process and a failed process, let's face it, as well.
Sounds like a blessing in disguise.
It was.
So let's build on that, because it's always interesting to hear the trajectory of a company and the founder as they take on more and more capital and more institutional capital. What's that ladder been like for you? And bring us up to today with the most recent deal. What are expectations now? How is the company operating? It's always fascinating to hear that entire life cycle, getting to where you're at today and taking on different capital sources.
Yeah, I know, Sax. It's just you think about it, it's not that long ago, but it is a long time in private equity world as well as far as turns. 2017 failed transaction. We don't have a CFO. We don't have a head of sales, et cetera. Okay, I feel comfortable getting a CFO. We go through a process in 2018 with FTV. You're worried that you're going to be retraded because that was your prior experience before. None of that occurred. You didn't even understand.
For the audience, retrading means you have a deal, and then as the buyer, the investor does their due diligence, they find things, or they find things, or they make things up to lower the price.
That's right. And our case was probably
Good definition, Tom.
Yeah. It was probably some of both. Enterprise value from 17 to 18 and those 13 months doubled. So the deal that I had on the table in 2017, the deal that we had in 2018, the enterprise value doubled. So Tom, it was a blessing. I wish it doubled every 13 months like that, but it wasn't. And so FTV came in and then, we saw an opportunity for another transaction. One of our competitors transacted and frankly, in December, we had built a growth budget for us to have a growth budget around what we were doing. So it was, how do we grow the company? And immediately when they transacted off of an EBITDA multiple, it became, go redo the budget, maximize EBITDA. We're going to go out to market again. And you think about what value you have to create. And one of the things I did at the beginning of the FTV investment, I said, what was tell me the thesis that you have around our return. And Tom, they probably said, we're going to tell him 30% more than we really have outlined, and he'll go get it. And so that was helpful for me to understand when optionality occurred where I could go out to maybe market because it was the right timing because I achieved their financial goals. And that was an important timing for us. And when you think about, you have to go create 4 times the value of you didn't even create $100 million in enterprise value. You have to now go create $400 million of enterprise value. And so, you realize though that 1 to 10 was probably a lot harder than 10 to 100 because of the fact of the infrastructure you put in place. So that was, I think, governance, infrastructure, methodologies, processes you realize you had to do that to be able to scale. And if you don't have that in place, you're not going to be able to scale to the next return value that people want. And then, it's around metrics driven. So once we did the deal with Warburg Pincus, I said, what does a company look like that's $1 billion plus valuation company? What does that company look like? What's their growth rate? What's their EBITDA percentage? What's their gross margin? And then we can build a company that looks like that and back into what we need to do from a strategic perspective on that. Which then goes back to the all gas, no brake. I had to implement the objective and key result, the John Doerr method around how we look at the business and figuring out if it doesn't fall on that list, we don't need to do it, because as a founder, we think we can do everything. And you realize you get spread too thin and then you leak oil.
Yeah. Well, great story. Congratulations again. That's awesome. So where do you go from here? What's next?
Yeah. I think we've got a few themes, for the company. HG Capital is a European-based fund. And interestingly enough, when we look at our interest, we had a lot of interest from European-based funds. They want to deploy capital in the U.S. And for us, we want to grow in Europe. And we believe Europe should be 35 to 40% of our revenue. And now it's 7% of our revenue. And so HG is coming to bear with a plan of how we grow in Europe, both organically and inorganically. They understand the country-specific differences that we need to employ around there. HG also has over 25 data scientists focused on AI, and as we think about that, we need to continue to invest in AI. But I tell our people, the solution for efficiency isn't always AI. Let's look at it holistically, and it's AI will be a tool maybe that we use as well. And then we've got two other themes. One of them is around the enterprise market. As you look at A-lign, we have 5,000 customers in the SMB market more so. And as we continue to move up market from a PE firm, how do we then move up market from a customer base? And so we've got a great right to win in enterprise in an area that we're going into. And then lastly, within the U.S., there's a consolidation play. There's competitors that are larger than us and competitors that are smaller than us, but we've got a great financial profile that we can be the platform for that. And out of our, we've only done one acquisition that was extremely small to date. Everything else has been organic. And so it is a new challenge for myself and the team of how we do inorganic growth. And as you all know, running a fund, you buy and sell companies every day. For us, that's not been in our DNA. So it's a new challenge for this team to be able to go after, and HG really believes that. So those are the growth vectors, and we got to figure out how to get to a $5 billion plus valuation now.
Love that.
It's going to be fun to watch, and good luck. One question I got to ask you, I'll flip back to you. So I got to ask this because I'm so when you look at AI and you look at quantum computing and you look at cybersecurity, how do one of the things that I've heard is like with quantum computing, all the encryption today that everybody's using is going to be, all of it's going to be hackable.
Yeah.
And with AI, and and I guess it's a leapfrog thing, but how do you in helping your customers stay ahead of hackers are going to be using AI, hackers are going to be using quantum computing. Mm-hmm. How do you look at that?
We look at it more from the framework than the tool. People say, well, what's the tool I should use? Let's look at the framework of how you introduce AI. What's the process for the AI introduction? What's your criteria for what you use AI for? How do you run it through public versus your own AI tools? Is that data out there available for the public to see? And how are you training the models on that? So I think, Tom, we take it from a framework approach. The standards that we audit against, one of them is International Security Standard, and it's going to be adopted as the AI EU standard. And it'll probably make its way over to the US. And it starts with a framework approach. What's your information security management system related to AI? And if you apply that framework, the tool can change, the technology can change, you can encrypt it. But the point is you're going to be monitoring the risks on that so you can change to what you're utilizing rather than sticking with technology that at some point when you do your annual or whatever periodic risk assessment, it's going to be hacked. So I guess we look at this framework and try to figure out, we can interject different tools in there. I frankly don't care about that. I care more about the framework you put in place that you're following, and then we'll implement a tool as we see it's going to meet the.
How far away is the U.S. from having some sort of uniform framework for compliance around AI?
Sorry, that's my dog.
The dog's very excited about AI as well.
As is everybody.
Yes. Unfortunately, in our political environment, it almost is which way the wind's blowing. People say we want to deregulate the environment as much as possible. We want the government to utilize outsourcers that are using AI. Well, there's a risk in doing that. And you have people then worried about the implementation of that, because if they use AI incorrectly, what's the liability associated with that, specifically with utilizing anything with the government? So we actually see it coming up, Sax, on a similar to privacy. You see it coming up on a state-by-state basis first, rather than an entire country basis. And I wish. So there is CMMC, which is a cybersecurity maturity model for the Department of Defense. How are we securing the plans of fighter jets, whether it's the F-16, whatever it is, and the bolts that go into the fighter jets and the engines and things like that? And so they have adopted a DoD level standard for security. There's been nothing available in the commercial market so far in the US that is adopted. There is standards available. I shouldn't say that, but getting the government to agree on what standard we wanted to use and how to implement it, you don't see it happening. So you see this state by state, which, Tom started with. SOC 2 is so prolific because it's a federal based standard. You see adoption happening so quickly. When you see the state by state stuff, it's going to be a crawl. Eventually, someone just have to say, to hell with the politics. This is what we should do. And everyone's going to get behind it. And unfortunately, I believe it's going to be after there is a breach that occurs that someone then has to get behind it.
And typically in the political world, we are retroactive, as we know. So you're probably right in that sense. Although we have seen a lot of issues go state by state. And so it'll be interesting to see how it plays out, how California reacts compared to Florida, who have completely different political landscapes, but are trying to solve a similar problem.
Well, the Trump administration seems pretty clear. They don't want AI being regulated state by state. They want it to be at the federal level.
Which, again, we agree with. And the interesting thing about what the DoD did with related to cybersecurity, it was a standard that started under Trump, continued under Biden. It wasn't installed at all, and now is being finalized under Trump. So, there's hope that it doesn't matter which side of the aisle that you sit on, that you think having the cybersecurity regulations a good idea. And as the bad nation state actors only get more sophisticated, it should be a good idea that everyone can get behind. Implementation, as you know, is 90% of the battle, and so we'll see how that comes to play.
Squad,
Go ahead.
Tom, just want to hit on Tampa and the DoD here. So talked about the DoD in that last comment, and we talked about Tampa Bay and the ecosystem around cybersecurity and how prolific it's become. How much of the fact that the DoD, SOCOM, CENTCOM are based in Tampa, how much of that has to do with this boom in cybersecurity, if any at all?
We've actually seen a boom related to the employment base in cybersecurity. So you have people that are retiring from McDill that want to come into a commercial job, and there's tremendous opportunities for them. I mean, we belong to a few of the programs where they actually carry their salary for 6 months. You get to utilize it. You get to see if they like us, we like them. Do they like the commercial space? And you talk about a mature employee. Yes, they're very mature, management expertise, et cetera, and also extremely loyal as well. And so we've different programs that they've come out of. And as the federal government has adopted more and more, whether it's CMMC or whether it's FedRAMP that we've talked about in the past before with your portfolio companies, like whether it's those two things, the folks coming out of McDill are prime for us to hire and come right into a line, and they have the requisite experience, the salary expectations, et cetera. So it's been a real feather in our cap. Is it critical to our success? No. Is it totally helpful that they're in our backyard right now? And is that something that's a differentiator for us compared to other competitors? Yes. We have 3 times as many certified auditors to do the federal audit work than our competitors. And I can tell you a lot of it has to do with McDill in our backyard.
It's huge. I mean, you look at the country of Israel, cybersecurity Mecca, the majority of those companies start from individuals coming from the IDF. And so it's a bridge that I feel like will continue to be more and more fruitful, especially as we continue to see the private commercialization of DoD buying and of defense technologies, which has just been a white hot space in venture capital led by companies like Palantir and Anduril over the last, give or take, 5 years.
No doubt about it. I totally agree.
Tom, kick it over to you.
This has been great, Scott. We'll wrap it up. Thank you so much for your time. We'd like to do a lightning round at the end, so I'm going to ask you just a couple five quick questions, and just brief answers, and they're all over the place. So, first of all, we sit here today, August 20th, 2025. Bitcoin's, I think it hit 123 like last week, but then now it's back to like 113 or something. I didn't check it today, but where do you see the price of Bitcoin going when you look out 5 years? What do you think Bitcoin's at?
It's interesting you say that. My college age son is all excited in crypto and up all night reading about crypto. For a guy who goes and starts companies, I'm extremely risk adverse. So I continue.
You're an accountant,
right? Risk adverse. There's no way I'm gonna bet on a Bitcoin portfolio, and then I just go start companies. But I continue to say the doomsdayer about it. I hope I'm not right. Because I know many of my friends and obviously my son's invested in it as well. So I got a feeling that I will continue to be wrong, and it will be in 5 years, it'll be definitely sit higher than it is today.
Okay. When you look at artificial intelligence, every new wave of technology that's come along, going back to the PC and even the mainframe, every time new technology, I can remember when people say computers are going to, they're going to, eliminate so many jobs, and what ends up happening is just the opposite. They create so many jobs, so many new jobs we couldn't even think of. My daughter's in digital media. I remember telling her to get off her phone and quit playing with TikTok, and so now she does that for a living.
Yeah.
But so, do you see AI creating jobs, net neutral with jobs, or do you see it as the first time where technology is really going to eliminate many, many jobs?
Again, I think it's going to create jobs. Similarly, when they said, robots are going to manufacture cars and eliminate jobs, and people then became more sophisticated where they look for the employment. I think the worker globally will become more sophisticated because of AI taking the lower level jobs or automating some of those types of things. You'll continue to see the leveling up of employment out there and what's required. So I joke. Every year we do a cybersecurity audit. Oh, this is going to be easier this year because we did it last year. It's never easier. Things get harder, the risks get greater. I think it's going to be the same thing with AI. People are going to be asked to do more, going through due diligence on a deal instead of the analysts being able to do Excel spreadsheets. That they're still going to want to, now they go, we can actually ask more questions before we invest. And now we can have AI do the lower level work, and we can spend more time on questions. So I think it's a positive. It's not a net neutral. I think it's a positive place that we're going to be in, and people are going to gain greater skills for employment.
Yeah. Well, I hope you're right, and I tend to think the same thing. When you look at AI, historically, again, going back to disruptive technology waves that have come across, it's always the startups for the most part who win. I mean, you go back to the personal computer industry. It was IBM should have dominated that, but no, it was Microsoft and Apple and companies like that. Then that happened again in 95 with the internet. You would have thought some of the big incumbent legacy companies would be the winners, but no, it was the upstarts like Amazon and, countless examples of that. What about AI? So it seems like you have to invest so much in NVIDIA chips and these big server data centers, and the investment is so huge, and that only companies like Google with Gemini and ChatGPT is probably OpenAI, their company. You've got Elon with Grok now. Do you see the upstarts, the startup community being able to compete with these companies in the artificial intelligence race?
I do, and I think it, and I go back to, because the data, they're starting with fresh data. I feel like, A, you're entrenched in your process. B, you've got so much data that you're trying to absorb. You have so much risk. Again, going back to when I was 26 versus this year I turned 50, my risk tolerance is a lot different. And I feel like these smaller companies with how quickly things can get from, idea to production because they're not relying on programming body shops and huge dollars that way. I firmly believe it. Yes, it is. The big companies are going to obviously have tons of success, but I do think it's going to breed these smaller companies solving problems and be able to get to market quicker. They have less to lose, let's face it, right? And that's why I think be able to handle that. And I think people will get behind in the investment on it and say, if I get 1 out of 10 right, it's worth my time to invest in 10 because one's going to make my entire numbers.
Yeah, that's a game we play. And we're rooting for we're rooting for the little guys, the founders, the entrepreneurs.
Always are.
Last question. When you look at AI again and just technology as a whole, China seems to be the big threat to the United States has dominated technologies for the last 100 years, 50 years, whatever time frame you want to look at. We're the leader. China seems to be the first time we have a real threat to our technology dominance. And in cybersecurity, I think everybody believes that a lot of the bad actors come out of China and Asia. How do you look at that, and what do you think about the China threat? And do you think America will still, when we look back, if we're 20 years from now looking back, will we still be the leaders?
When I try to go to sleep and I can, I watch documentaries on Amazon Prime about, the 1950s, 60s, going back to the industrial age, et cetera, Tom. So I think about America as this world power, and I do think that technology has leveled the playing field on this. And I do think the U.S. is going to need to stay sharp because China is coming after us. We have relied on them so much for the throughput of our technology. So as you look at the supply chain of what we're dependent upon is coming through China. And so unless we figure out how to remove that threat from our supply chain, they're always going to be able to be warehousing the IP, warehousing the cash, to be dependent upon them. I think it is a threat for us. And until we figure out how things that we do related to technology don't flow through China to us, it may end up with us, but it's going to flow through China. Until there's a different solution to that, we're really enriching our biggest threat in the marketplace to the U.S. And so, I hope when my son's a CEO at 50 and he's watching the documentaries when he can't sleep at night, that it's not where he watches this podcast and we predicted it and nothing happened. I hope something happens where we can continue to remain ahead of the game compared to the other countries.
Good. Same. Great. Scott, this has been great. Really appreciate your time. All the best for your continued success. All of us are so proud of you and A-lign and what you've built here locally in Tampa and Florida. It's so great for our community, for our state. And thanks again. Sax?
Scott, thank you so much. It was great to see you. And to all of our listeners, if you enjoyed today, please subscribe on our YouTube channel, throw us a like on Instagram or a comment. Thank you all. Have a great rest of your day. And Tom and I will see you soon.